Hello traders, this is Rich Derrick from Tradesight. This is the market preview for Wednesday, March 6, 2013. We had a strong day and expanded the range of the recent move to the upside here. The ES futures were up 11 handles, and the NQs were up 38 on the day. NQs definitely outperformed the ES on a relative performance basis, so that's definitely a positive turn. But while we were doing that, one thing did develop. We do have a differential sell signal in the NQ because it closed a little bit too far off the high. We also have a differential sell signal in the YM. So 2 to 3 sides we do have sell signals. So while we've had a pretty nice and pretty acute advance here in the short term, I think we need to be a little bit more cautious tomorrow and definitely have a couple of short ideas ready just in case we do start to roll to the downside tomorrow. And that doesn't mean we're looking for an overall reversal in the market, but the indication is that we're probably in for a little bit of a tougher time to make progress to the upside tomorrow for the first time in many days. The market internals were pretty good today. The VIX was down by 53 cents, and the advanced declines were definitely positive, plus 1,500 issues on New York and plus about 1,000 on NASDAQ. So decent market internals for sure, and we'll take a look at those numbers a little bit later. Now let's move on to the ES and the NQ charts themselves. All right, so first up, here's the ES futures. You can see that we did make a new high in the move and also a new closing high in the move. A couple key technical features here. Well, we had this little bitty drop and this little bit of a correction here. We did get that very bearish reading from the AAII survey last week. And remember, the bearish reading is a contra-indicator. So if people are getting bearish, that means there's a bid under the market. So we weren't particularly looking for shorts. So we've off of that and off of the 10-day trend that was oversold, we pivoted back to the upside here. And the key development in today's trade is that we've closed above the plus 2/8 level on our Murray math box. So what we're going to do is we're going to reset this tomorrow, and we're going to shift this box to the upside. So definitely a positive development for the overall picture. But keep in mind here, while we have reset the box to the upside, we're 10 bars up now. This is the 10th day up. Here's 9 yesterday. Here's 10 today, which is going to print. So we're getting pretty deep into this 1 through 13 exhaustion count. So definitely keep an eye on that going forward. Moving on to the NQ futures, the NQs also had a very strong day. They were, as we talked about earlier, they were relatively more strong than the ES futures. We are getting up close to this 8/8 level. 28.1250 is going to be a very key level because it's the 8/8 level in the Murray math box. Remember, there's 3 levels that are the most important: the 0/8, the 4/8, and the 8/8. So now we're coming up to the 8/8 level. So this is going to be a very important level if we can get up to that 28.1250. Now keep in mind that's going to be key resistance, and we do have that differential sell signal in place. So if we do get a gap up tomorrow, but if we remain within the gap fill thresholds or the pressure thresholds, that's going to be an indication that we want to look for a 5-minute low to sell. Here's a look at the multi-sector daily chart, which has pretty much the same theme. Pretty good performance out of the more growth-oriented sectors, but the defensive sectors are still pretty weak here. The XAU is still kind of taking gas here, but like we talked about yesterday, keep in mind that this spread is starting to get really wide here, and this is the widest it has been since this whole move initiated. One of the key measures for the risk on and risk off appetite for the traders is the SPX TLT cross. Now, of course, we're still in this very bullish channel working to the upside. On that little break, we found support here at the lower cusp of this channel. We're back up. We're only to the midpoint now, so there is definitely potential to keep working higher here. We also have to keep in mind that we want to make sure we don't wind up making a lower high here, take out this channel to the downside. But for now, we're still in this channel, and this channel is indicating that risk is still being put on in the market. All right, now here's the cumulative advanced decline line. The Nasdaq has recouped itself and has gotten back up to the prior high water mark on the move, which is obviously happening from the relative strength that we enjoyed today in the Nasdaq market. So definitely want to see this continue higher. The New York Stock Exchange side, the NYSE side, has remained positive throughout this whole move. We never got a divergence. We're pushing up to a new high, so this indicates health in the market. We do not yet have a divergence to the downside that would likely precede a real lasting rollover. And looking at our comparison chart of the OSX versus the oil futures themselves, the OSX is the stocks that represent the drillers and producers of the commodity. We're potentially setting up a higher low here while the futures have dropped lower. We're kind of expecting that with the lagging nature of the overall OSX, so this was kind of in the cards to happen, and it did. But now we're starting to set up this little higher low here, so keep an eye on crude tomorrow for a pivot back to the upside. Could be tomorrow, could be the next day, but keep an eye on that because the crude futures are weaker than the actual stocks, and the stocks tend to lead the crude futures, so we've got a bit of a divergence here that you want to be aware of. Now looking at the SOX NDX cross in the larger time frame, this is the weekly. We're still below that key area. If we can get the stocks to have some more relative strength and really get back above this key breakdown area, then we could see some better price action out of the NASDAQ futures and the NASDAQ sector in general. So keep an eye on this. Not there yet, but this is definitely something we're going to be monitoring every day here. All right, now here's the NDX versus the SPX. The NASDAQ has been relatively weak versus the S&P. For 2013 so far. We do have the potential here of setting up a higher low and getting some kind of an uptrend here going. We have taken out this previous high just by a tick or so. But just remember, one day does not make a trend. So I want to see if we can continue with this relative strength in the NASDAQ. A little better performance like we saw in the past session from Apple would go a long way since it's so overweighted in the NDX. Well, let's keep an eye on this. If this develops into more of an uptrend and we can get kind of an upward bias going, as we've seen in the SPX TLT cross that we just looked at a few charts ago, that would be very, very positive for the market overall. But again, like we said, one day does not make a trend, and we need to see some better follow through. Put call ratio is starting to retreat from these somewhat bearish readings that we had when we sold off here. We're nowhere near overbought with a climactically bullish reading where people are just scrambling for calls. Not seeing that right now, just basically pulling back to the neutral area. All right, so on to the individual sectors. Here's the SOX, which was the top performing sector on the day. So I want to point out that we're still below this key 8 ace level here, and we did produce a Seeker 13 exhaustion warning today. So this is definitely a notable development. So keep an eye on a break back down below the 10 EMA, and a close below that would indicate that this exhaustion warning has gone active as a sell signal. All right, and here's a look at the OSX, the Oil Services Index. Basically an inside day. The sector index traded inside the previous day's range, is still being pinched between the 10 EMA and the 50. So if we get a release out of this to the upside or the downside, it should have a little extra punch to it, since we have an inside day here to kind of wind it up with a little extra power. Okay guys, and here's a look at the BTK index. The BTK was definitely positive on the day, pushed above the 8 ace level, but didn't really get too much distance away from it yet. I think the big feature though is that today's candle was 13 days up in the Seeker. Granted, we do not have a lot of extension here on this 1 through 13, which always makes these a little less interesting, but nonetheless we do have a 13 on the chart, and we always want to respect that and make sure that we're aware that that's there, and also be careful of where the 10 EMA is, because if we close back down below the 10 EMA, that activates that 13 exhaustion warning. Here's the BKX. The BKX was fairly strong on the day. During the middle part of the session, it really faded more than a lot of the other sectors. Thing to be aware of here is we're closing near the low of the session, and we may have a lower high in place here. We reached up and challenged these higher levels here, and were rejected by sellers and faded fairly aggressively into the close. Here's the XAU, which was essentially the last laggard on the day. Again, same theme, source of funds for other investments. Did not break to a new low. We're just kind of inside the prior day here. Keep an eye on this. This is pretty oversold here, and especially when you take a look at the weekly chart, you can see get a little better perspective of what it looks like. So it's pretty well oversold here. The oil futures have declined back down here to interact with the 200 period moving average. So this is always a key level of support here. Usually when it gets down there, it doesn't break right away, even if it ultimately will. So right now we're just kind of gaming this 200 DMA. Bar count's kind of nowhere as far as the price goes, but we do have a point of reference here with these prior highs providing support, at least for the time being. And then with the gold shares, still just kind of hammering out this same area here. Haven't really broken lower here yet. This is a key area, possible double bottom, but it doesn't really mean anything until that ultimately qualifies itself. So still standing by on that. Well, that's going to be it for tonight, folks. As always, thanks for listening. And this has been Rich Derrick for Tradesight. I hope to see you again soon.